Good morning. Welcome to Forex in Four. Today is Friday, October 14th, 2011. All right, well, let's just get started with the euro here and see what's happening this morning. Right now, the focus is on this G20 meeting and what they're going to do about the euro debt crisis. And it looks like perhaps they're saying that the IMF is going to have a much bigger role in dealing with this than previously thought. So they may be supportive. They may get some money coming in from some of the other G20 countries who can now funnel money through the IMF to support the IMF, and then the IMF in turn can sort of support the Eurozone. So you may see that happen. Okay, they're also talking about bigger haircuts for the banks and holders of Greek debt. Initially, that July 21st accord, I think, put it at 21% haircut, meaning people were willing to accept 21% losses on them. But I think that's going up. So they're saying now that perhaps they're talking about 50% haircut. So it may basically double that. So if you think about the losses, you know, how that's going to carry over to the banking system, that could be a potential problem. But if the IMF's standing by ready to, help out, and, they're talking about recapitalizing the banks as well through the ECB. So there's a lot going on here. We know that Greece is bankrupt. That's not a real issue. The question is, are they going to do this orderly? What happens if the bonds do default? The haircuts technically constitute a default. If so, does that trigger credit default swaps, which could potentially put banks at much bigger risk as well? So all things that need to be considered. With all this in mind, S&P basically said, all right, let's get this show on the road here, and they downgraded Spain's credit yesterday. It's the third time in 3 years I think they've done that. So right now, we're moving towards this meeting that's going to happen, I think, on November 3rd. I think it's another G20 meeting. I'm not exactly sure what the nature of the meeting is, but that's essentially the target time for when this thing needs to be done by. So there's another EU meeting next week, and we'll start to see what's happening. But you see here, Euro's just bouncing a little bit higher. All right, we're in a little bit of a risk-taking mode here. 138 is sort of this pivot area, and we're just looking at the 5-minute chart. Let me back it out here. I'll go back to the 30-minute chart. And you can see yesterday 137 was the number. All right, now we're back up to 138, and we're sort of swinging around. All right, so there's definite risk appetite in the market, but a lot of that I think is coming from stock earnings here in the U.S. Now let's just look at S&P 500 real quick. You can see that was selling off yesterday. And then boom, we had selling off yesterday, and then you get the boom, the move higher here, okay, into the close of the day, where stocks basically were able to rebound from early losses and come out. I think it was just a little bit down, and now we're posting up higher here. We're above this 1210 area. Google reported blowout earnings, so that's looking nice for stocks. Then you get the correlations that happen with the other markets, so that rising tide lifts all ships. But there's not a ton of news on the docket here. All right, you can see that the pound looks very similar to the euro, and you're going to see that, especially when you have the dollar sort of driving the show, if you will. But one thing we can take a look at that might be a little bit interesting is that we've got Aussie dollar moving higher. All right, yesterday, or I guess it was the previous day, I talked about 102.50 as the target on Aussie. You can check out the chart of the day on the Forex news site. All right, I called that one for you. Nothing like a little pat on the back for myself there. But overnight we had China reported CPI data that came in a little bit lower than expected. Okay, so they were looking at inflation of 6.9% was the expectation for the producer price index. All right, that came in at 6.5, and then the consumer price index came in at 6.1 as expected. So that was lower than last month, which was 6.2. So inflation seems to be abating there just a little bit. And that's I suppose a good thing. Eurozone CPI came in as expected. All right, 3% inflation, which not great but not horrible either. All right, and then the only other news we're really going to have going forward this morning is going to be we've got U.S. advanced retail sales, which is coming out, which will be important to see how the economy is doing. Okay, the consumer, public and private consumption is roughly 70% of our GDP. So if advanced retail sales are good, that means more people are buying. That's good for GDP figures. We'll see that. And then later on in the morning, we'll get University of Michigan consumer confidence. So that's kind of what's happening right now. We're in risk-taking mode. So Aussie moving higher. That 102.50 area was one that we had targeted earlier in the week. So glad to see that one hit. Let's see. Whoops, I'm sorry. I want to look at dollar yen here for a moment. And you can see we made this little splash through 77. I'm going to back this out a little bit to the 2-hour chart so you can see it a little bit better. But we were just in this tight range here. All right, it was about 76 to 77. All right, we blasted through 77 right here on this move, pulled back. All right, we held the S1 pivot support there, and now we're moving higher just above 77. So we could see a little bit of a breakout start to happen in dollar yen, which Japan would certainly welcome a weaker yen at this point. But how low it can go is anyone's guess at this point, because we've just sort of been pinned in this range, and I think a lot of that hinges on the euro debt crisis and how this thing is resolved. So that's really what we're looking at. Not a ton of exciting news today, but the stock earnings look to be driving risk appetite higher. We can take a look at gold here. All right, still sitting beneath 1700, which is a place that it's sort of found this middle ground. We could be looking at potentially, let me pull this out on a daily chart. We could be looking at a potential bear flag here, and I'll describe how that works. But essentially, just going offhand here, we could be looking at about 1300 for gold prices. So we'll have to see. We'll have to see what happens. But a lot going on, but not much of anything going on, if you catch my drift. Today's Friday. All right, stock earnings have been good. All right, there could be some risk aversion and selling going into the weekend because people don't want to hold because they're afraid of what might happen in euro debt crisis. But I think people are really looking for just about any reason to buy right now. And I think the Google stock earnings are good enough to say, okay, you know what, we got to jump in here. So that's kind of what I'm looking at for today, folks. Have a nice weekend and good trading to all.